Well, I'm sure there are questions for you, but unless there's something just for clarification, why don't we move on and we'll take the questions at the end. So, Ms. Stringer, thanks for being here.
Thank you. I don't have any slides today, and I'll just turn my seat so I can see all of you. So of course we know that drinking and driving has long been a serious traffic safety and a serious public health problem. And we've seen data that it's improving, but it still, of course, continues to cause significant loss on our highways. And we know that there's a 1 in 3 chance of being in an alcohol impaired crash in your lifetime. So I really appreciate being here today, and I appreciate the committee's focus on these issues. I think they're critical, and I applaud the work that you're doing here. So I'm here today, and I'm going to talk about these issues from the perspective of the state insurance regulators. And I wanted to talk just a little bit in the beginning, just to give some background context about insurance regulation and what our National Association of Insurance Commissioners does. So the insurance industry is regulated at the state level, and it has been for nearly 150 years. This is something that Congress has delegated to the states and continues to largely defer to them. And really the role of the state insurance regulator, they're working to make sure that the insurance companies are financially solvent so that they can pay policyholder claims. So they're really looking at policyholder protection and making sure insurance companies are financially solvent. And they're also monitoring the activities of the insurance companies in the marketplace. So state insurance regulators, they're going to be reviewing the insurance contracts that the insurer markets to the public. And in many cases, they are reviewing the rates and the rating systems of the insurance companies to determine, so they can see how they're determining what prices the insurance companies are charging their consumers. So there's 56 state insurance regulators, including the 5 territories and DC. And in 1871, they created the National Association of Insurance Commissioners, and what we do is we are the standard setting and regulatory support organization for the state insurance regulators. And through the NAIC, state insurance regulators establish standards and best practices and regulation, and they really conduct peer review and coordinate regulatory oversight. So the NAIC provides a national forum for all of our state insurance regulators to really discuss common issues and interests and really work cooperatively across all of the states. And we work through the NAIC. We develop model legislation, we develop rules, regulations, and white papers, and this is all in coordinating, in an effort to coordinating regulatory policy. So what I'm going to talk about today, certainly state insurance regulators aren't creating the technology, but they have to be on top of all these issues to make sure the regulatory framework is evolving with all these technologies that we're seeing and trying to keep pace with the technology. So at a fundamental level, and we've heard about this too, insurance prices are risk-based. So since impaired driving is going to be riskier than driving without impairment, those that are caught driving impaired are going to see much higher insurance rates than the average driver. So the knowledge that your insurance rate can be raised significantly if you're caught impaired driving, this can serve as a deterrent to driving impaired, particularly for the repeat offenders. I mean, anecdotally, we've heard that your insurance rate can rise by 3 to 5 times. It could potentially be 3 to 5 times higher than an auto liability policy of someone that has a clean driving record. So, and insurance also serves as a financial tool to protect and compensate those that are injured by an insured impaired driver. And as Jessica mentioned, the insurance sector historically has been very much involved in the promotion of vehicle safety. And some of those examples, there's the mandatory seatbelt laws, safety glass in vehicle windows, anti-lock brakes, and some other innovations. So it is something that the insurance sector is engaged in and has been for a while. I wanted to talk and go in more depth too. We heard a little about telematics, and this is certainly an innovation in the auto insurance marketplace that might be useful in impacting and reducing impaired driving. So, some insurers have introduced telematics and they use it for rating and underwriting purposes. And from an insurance perspective, it's the term telematics is a term that we use to the use of electronic devices to track the movements of the vehicle and that driver behavior. So it's going to be providing insurer with information about the location and the other characteristics of the vehicle. And insurers are using telematics to monitor driver behavior. So this monitoring capability allows the insurer to improve the accuracy of their insurance pricing. But what they're also doing is they're offering discounts. They're offering, and it's rewarding good drivers through price discounts. And I think this incentive can help spur consumers to adopt safer driving behavior. And it also offers an opportunity to reduce incidents of impaired driving. So the sensors, as we heard, they can tell if you're traveling at excessive speeds or if you're traveling at a speed much lower than the posted speed limit. And it can tell if you're staying in your lane, if you're making hard stops. And there's some other features too. And I think this tracking of behavior, driver behavior, may impact an alcohol impaired driver's decision making process. Do they want to get in the car knowing that they're going to have all this data tracking if they're staying in their lane, how fast they're going? So that's something to keep in mind. And in terms of telematics in the insurance industry, we really think that it is posed for rapid growth. We have seen by the end of 2018, it's estimated that about 80% of new cars for sale in the US will be equipped with this onboard telematics devices. And then by 2020, 70% of all auto insurance companies will use telematics. The NAIC conducted a survey in 2014 of 47 state insurance departments, and in all but 5 jurisdictions, there are insurance companies offering telematics usage-based policies. And of that amount, we found that in 23 states, there were more than 5 insurance companies that were active in the insurance market, in the telematics insurance market. We also published a study in 2015 that's posted on our website and happy to share. It's focused on usage-based insurance and vehicle telematics, insurance market and regulatory implications. And that study has we collected a lot of input from our states, as well as we had Federal Highway Administration has a section on there that they wrote as well. It's really looking at these technological advances in telematics and how they're driving changes in the auto insurance market, and that impact on not only insurance companies but also on consumers. And one of the challenges, which we sort of touched on too, is that the practice of tracking mileage and driver behavior has raised with some of the consumer groups, there's concerns about privacy. So that's a challenge that we have seen. And as a result of that, we've seen some states have enacted legislation that's requiring disclosure of the tracking practices and devices. And then there's some insurers that limit the amount of data that they collect. So that's something to keep in mind. And also, as Jessica mentioned, cost. I mean, that's implementing a usage-based insurance program, particularly one that uses telematics, is something that is costly and resource intensive to the insurance companies. However, moving forward, we certainly think the recognition of some of the societal benefits and maybe this growing acceptance of the collection of personal data that might help spur increased demand for some of these telematics-based insurance products. I would mention, so the state insurance regulators, through the NAIC, we have formed a big data task force, so it's studying the type of data that insurance companies are collecting in general. and we're evaluating how it's used by insurance companies and third parties in terms of marketing and rating and underwriting and claims. And we're also evaluating the potential concerns and benefits for consumers about personal data collection and the ability to ensure that the data is being used in a manner that's consistent with state insurance regulations and state insurance statutes. Another innovation I wanted to mention, of course, an innovation that's on the horizon is the promise of the fully autonomous vehicle. That certainly offers an opportunity for an impaired person to turn on the autonomous driving features and safely have the vehicle deliver them to their destination. And that's, of course, greatly reducing the incidence of human error. And as we know, the National Highway Traffic Safety Administration had estimated that human error is involved in 94% of vehicle accidents. So if you're reducing or eliminating that human error and allowing the vehicle to operate itself, it is something that's possible in the distant future, that to eliminate many of the impaired driving accidents. We've seen data from the Institute of Electrical and Electronics Engineers that they're predicting that 75% of the cars on the roads in the world will be autonomous by 2040. And we've seen a recent study by KPMG that foresees self-driving cars hitting the showrooms in 2019, which is, not too far away at all. From the state insurance regulators' perspective, I think they are excited about the promise of autonomous vehicles, but recognize that certainly it's a ways off, it's decades off before the majority of all the cars are going to be fully autonomous. And insurance regulation, as I mentioned, is going to need to continue to evolve to meet some of these challenges that are posed by the technological advances and developments that we're seeing in the not only in the insurance market, but just in general. And we have formed an innovation and technology task force. And through that, our state insurance regulators are discussing some of these technological developments in the insurance sector, and they're trying to determine the best way to develop regulatory guidance if necessary. And our group is planning to explore insurance regulatory issues surrounding autonomous vehicles. So that's something we're happy to keep the committee up to date on our work there and what some of those insurance regulatory issues will be with autonomous vehicles. And last summer, we gathered more than 300. We had our regulators, we had consumer representatives and industry stakeholders, and we held a forum on autonomous vehicles. It was gearing up for autonomous vehicles, and we were discussing how the integration of this type of technology is going to impact the auto insurance market and regulation. And so thinking too about the arrival of the increase of these autonomous vehicles, there is an expectation that personal liability will decrease since the technology can reduce human error. But what we're going to see on the other side is there going to be an increase in the exposure for manufacturers and product developers. And really the changes in the distribution of crashes and who is responsible will absolutely affect auto insurance. It's going to affect auto insurance policies, rates, and costs. And these transportation advances may lead to insurance companies having to rethink their strategies related to underwriting, claims, distribution channels, and the product mixes. And public policy and regulation is going to need to adapt to these technological innovations. And I don't think there's a determined path forward yet on how that's going to work. But I think despite the regulatory and legal challenges, the autonomous driving technology does hold some great promise for the future. And I just wanted to end that I think insurance and its technological advancements can offer an opportunity to help reduce impaired driving behavior and maybe reduce some incidents of impaired driving. And the state insurance regulators will continue to explore how these issues will impact from insurance regulation, and I know they're happy to be a partner in any of the Academies efforts, and happy to continue to share any data information that we have going forward.
Terrific.